demand for these types of chips and semis overall, and I see you raising some price targets within the notes. What names have you been raising price targets on? Which ones do you seem to have a little more confidence in lately?
Yeah, so I mean, the last couple of price target raises, Taiwan sent me this morning, but before that, Micron. I think a lot of the shifts thematically play into two things: pick up in standard servers, and then continue strong demand for AI silicon. So when I'm looking at AI silicon, that again, that's the largely Nvidia. But then on the standard server side, that's helping hard drives. So think Seagate and Western Digital. That's helping memory. That's a lot of the reason why I think Micron has a better outlook. Western Digital too plays on the memory side. And so a lot of the improvement is again, it's related to the standard server space, where we've seen cloud service providers pick up spend, and again, AI servers. So it's the ancillary names alongside Nvidia that play into that AI server market.
Yeah, it's interesting you mentioned Western Dig. I mean, we don't talk about that one as much. You talked about it along with Micron. Are there sort of things people maybe aren't seeing? You know, maybe with some of the high flyers, maybe it's time to step back on some of those names. You know, if you were trying to sort of shed light for folks who don't follow this as closely as you do, what would you tell them?
I would say that look, within the AI market, it looks like there is a clear path to higher revenues into the Blackwell cycle. So that we're going to get better numbers from Nvidia through at least middle of next year, potentially longer, just because Hopper, what's shipping now, is doing really well, and people have basically made commitments to buy into Blackwell. But then from kind of other beneficiaries, in a similar sense, because you need more storage, that the storage names are seeing a benefit there. So again, Seagate, Western Digital, Micron, because you need more memory, and specifically because you need more HBM for these AI developments, and high bandwidth memory is taking a lot of the CapEx focus, a lot of the operational focus. That means there's just not enough standard DRAM. And so when you think about the memory names, I mean, we have a buy on Micron, but even if you shift over to Hynix and Samsung, which I don't cover, that there's going to be more demand there, and it just looks like there isn't going to be enough supply, certainly through 2024, likely through a lot of 2025. And when there's not enough supply of hard drives, not enough supply of memory, pricing goes up, margins go up, and traditionally the stocks have gone up as well.
Yeah, thanks for bringing some of those that we don't focus on as much sometimes. Matthew Bryson, thank you. Wedbush Securities, appreciate it. Thanks for joining us on the show.
As Benchmark boosts targets, which we will discuss in today's video, along with how this may impact Nvidia stock, first make sure you subscribe to our channel if you want to stay up to date on the most recent news about Nvidia and the stock market. We post updates on the biggest shifts and catalysts in the market, so click the follow button to ensure you don't miss the most recent updates. Now let's get back to today's video. Benchmark increased its price objective for NVDA Corporation on Friday from $135 to $170, and it reiterated its buy recommendation for the company's shares. The modification comes after Benchmark held an investor fireside chat with Nvidia recently. This event gave Benchmark more faith in Nvidia's continued leadership in the AI space, as well as its prospects for future sales and profit growth. The analyst emphasized Nvidia's persistent conviction that in spite of stepping up production efforts, client demand still exceeds supply capabilities. Since both Nvidia systems and customer-developed silicon are expected to be accommodated within the expanding capital budgets of clients, this demand is not viewed as being impacted by customers' own internal silicon advances. Benchmark's optimism stems from Nvidia's strong market position and anticipated performance. The analyst believes that despite its clients developing their own semiconductor solutions at an accelerated rate, Nvidia's growth trajectory will continue to be robust. Higher projections for NVIDIA's fiscal years 2025 and 2026 have resulted from this perspective. Benchmark's increased price objective is indicative of a favorable assessment of NVIDIA's financial prospects. According to the company's estimate, NVIDIA is expected to maintain its dominant position in the AI market due to strong client demand that outpaces the company's capacity to meet. Intel is getting ready to introduce its Gaudi 3 chip to the AI chip market in an effort to disrupt NVIDIA's hegemony. Intel's strategic aim to democratize AI chip development is indicated by its participation in open-source projects like Triton, which are supported by AMD and Meta platforms. Truist Securities kept its buy recommendation on Nvidia, predicting more outperformance through organic sales growth. As a result of Nvidia's second quarter sales report exceeding estimates, the market responded favorably. Investors are still keeping a close eye on the key to earnings season and the impending U.S. inflation reports, though, since these events will be critical in determining the values of rapidly rising megacaps like Nvidia. Real-time data and insights significantly enhance the outlook for NVDA Corporation in light of Benchmark's recent bullish opinion regarding the company. With a market value of a healthy $3.13 trillion, NVDA is well represented in the tech sector. The company exhibits a premium value with a high P/E ratio of 74.5. bolstered by remarkable sales growth of over 208% in the last 12 months as of Q1 2025. Furthermore, NVDA's gross profit margin for the same time period was a remarkable 75.29%, demonstrating outstanding profitability and operational efficiency. However, first of all, thank you for watching the entire way through. It takes a lot of work and time to create these videos, so if you liked it, please hit the like button and subscribe to the channel. Your support will greatly aid in our growth. Now back to the video.
Among other things, one of the data points that the note brings up is the number and percentage of firms in the U.S., and this includes firms of all sizes, that are using AI in their daily business or that are trying to. And it's not high, even not high among computing companies. It's a small number. So do you think that that is a valid concern here, that like we're putting all of this into AI, all this investment into AI, when is it going to bear some fruit?
Well, and we've done studies at Futurum Group polling people, polling corporate customers, talking about these very issues. And they say they want to spend and they intend to spend a lot more. But I think they're still figuring out what they're going to do with AI and where it can help their processes. But I think that, and the Goldman Sachs note, again, it is very thought-provoking. But I think one of the fallacies that the negative criticism in the note has is that the things that we do now with our computing will be the things that we do later with AI-driven computing. And I think that that's just wrong. I think it's hard for us to imagine the things that we'll be doing with AI. I was at SemiCon West this week, which is a big conference that is really about the manufacturing of semiconductors. And it pulls together a lot of the biggest and most interestingly, a lot of the small companies that do the work that makes semiconductors of all types. And there was a lot of discussion about AI, not driving demand, but about changing processes. How can we change how can we fix our plumbing, literal plumbing? How can we change our water usage by using the data that we get and processing it through AI in ways that weren't time efficient in the past? And how can we change our staff so they're fixing things before they break because AI tells us what's going to break in ways that we never would have done so because the calculations were just too time consuming to do. There are things that AI will let us do that we've never done before. And they might not be sexy things like writing your term papers on ChatGPT, which are easy to understand. But there'll be weird, different things that we've never done before. And I think that is where the revenues and the profits and indeed the GDP changes that the AI will come eventually. We just don't know what those are right now.
NVIDIA more than doubled in 2024 after an amazing 2023 performance. The stock has since increased by 170%. Taking into account NVIDIA's scale, that is an incredible run that cannot be compared. However, given its successful year, is it possible for NVIDIA to double from here? After all, it repeatedly shown investors to be mistaken. The surge in artificial intelligence, AI, has been linked to NVIDIA's growth. A significant amount of processing power is required to train AI models because they can only handle one calculation at a time. PC's central processing units, CPUs, fall short. GPUs, graphics processing units, are utilized instead of CPUs. The ability of GPUs to execute several calculations in parallel is essential for demanding workloads. Furthermore, GPUs can be coupled to form extremely powerful computers that can quickly produce cutting-edge AI models. Nvidia stands to gain since many businesses are constructing servers that are equipped with thousands of GPUs. In the GPU market, there are a few competitors, but none are as good as Nvidia, because anyone building a supercomputer to train AI models is probably an Nvidia customer. Nvidia has a firm hold on this market. Sales have skyrocketed as a result, and Nvidia has reported revenue that has tripled over several quarters. For a number of factors, it not only saw a rise in revenue, but also record profitability. First, with a best-in-class product that outperforms the competitors by a wide margin, it can charge whatever it wants. Secondly, it is already capable of producing these GPUs. And lastly, since there is already demand, there is no need to spend money on promotion. Nvidia has the best chance of reaching peak margins, which it recently posted, thanks to these variables together. Due to Nvidia's performance, stock owners are willing to pay a significant premium for the company's stock. Its price at 46 times prospective earnings suggests that investors are prepared to pay a premium for Nvidia's pre-projected future growth. Even though the market was aware of all of this going into 2024, the stock continued to rise in value over the year. In light of this, is it possible that Nvidia will double by 2024? If Nvidia doubles by the end of 2024, it would be unbelievable. Nvidia's business will undoubtedly prosper through 2024 and beyond, but there are concerns regarding the stock. Nvidia is currently valued around $3.1 trillion. It would be valued $6.2 trillion if it doubles. It would take a lot of records to be broken between now and the end of the year for a company to ever be valued at $4 trillion. In addition, the stock's value would need to nearly double as well. Even if Nvidia has consistently exceeded investors' expectations, the stock still has aggressive growth projected into it, and this expectation won't go down. Therefore, Nvidia would probably need to trade at more than 80 times forward earnings in order to double. In the history of the stock market, very few completely profitable corporations have consistently traded above 40 times earnings, much less 80. I don't think it's realistic to anticipate the stock to double as a result. Although Nvidia has been a huge success over the last 6 months, I don't think it's prudent for investors to anticipate a doubling of the stock in the near future. The numbers that would need to be included into the stock in order to accomplish a double by the end of 2024 are impeded by far too many obstacles. Nonetheless, what are your thoughts on Nvidia's stock? Is it worth buying at the moment? Please share your opinions with us in the comments below. And don't forget to share your NVDA evaluation with us.